This is a demonstration of problem M129A, preparing a schedule of cost of goods manufactured and an income statement for a manufacturing company. Gourmet Bones manufactures its own brand of pet chew bones. At the end of December 2024, the accounting records showed the following, and the problem gives us the beginning and ending balances for direct materials and the ending amounts for work in process inventory and finished goods inventory. It also provides us with other information that will either be in the schedule of cost of goods manufactured or in the income statement. So in the requirements, it states in Part 1 to prepare a schedule of cost of goods manufactured for Gourmet Bones for the year ended December 31st, 2024. So first we start out with our beginning work in process inventory, but we see in the information given that was 0. Next, we need to calculate the direct materials that we used. We start out with our direct materials beginning inventory, which was $13,500, and then we add to that our direct material purchases, which were $36,000, and that gives us direct materials available for use. Then we subtract our ending direct materials inventory, which was $7,500, and we get our direct materials that were used of $42,000. Now we need to record our direct labor, which the problem stated was $23,000. Now we need to calculate what the manufacturing overhead was. So when we look through the listing of the other information, we see 3 items that would be an overhead: the plant janitorial services, the utilities for the plant, and then the rent on the plant. And so those are going to be the 3 items that we will include in the schedule of cost of goods manufactured for overhead. And that gives us total manufacturing overhead of $19,000. So when we add the direct materials used, direct labor, and manufacturing overhead, we get total manufacturing costs incurred during the year of $84,000. Now we would add that to our beginning work in process inventory to get total manufacturing cost to account for, which in this case is the same amount since we had a 0 beginning work in process inventory. Then we would subtract from that our ending work in process inventory, which was $3,500 according to the information given. So our cost of goods manufactured was $80,500. In Part 2, it asks us to prepare an income statement for Gourmet Bones for the year ended December 31st, 2024. So our income statement is going to start with our net sales revenue, which we were given in the problem as $107,000. Next, we need to calculate cost of goods sold. So to calculate cost of goods sold, we start with beginning finished goods inventory, which the problem stated was 0. Then we add to that cost of goods manufactured, which we calculated previously as $80,500. And then that gives us cost of goods available for sale, and then we subtract from that our ending finished goods inventory, which was $5,200. And that gives us cost of goods sold of $75,300, which when subtracted from net sales revenue gives us gross profit of $31,700. And then we look back to the information that was given to us to find our selling and administrative expenses, which were our sales salaries, our delivery cost, and our customer service hotline cost. And those we would include in our calculation. So sales salaries was $6,000, delivery expense was $1,300, and the customer hotline service hotline was $1,200. That gives us total selling and administrative of $8,500 and gives us operating income of $23,200. In Part 3, it asks us, how does the format of the income statement for Gourmet Bones differ from the income statement of a merchandiser? Well, if you notice in Gourmet Bones, instead of having purchases, we have cost of goods manufactured, and we had to calculate that ourselves, and we also had our ending finished goods inventory. So in a merchandising company, you're going to have your beginning inventory, but you're going to have cost of goods. You're going to have purchases. That's going to be cost of goods available for sale, and then ending inventory. So mostly the difference is in calculating cost of goods manufactured. And then in part 4 it states Gourmet Bones manufactured 17,900 units of its product in 2024, and it states compute the company's unit product cost for the year rounded to the nearest cent. So to calculate the cost of the individual units, we take the total cost of goods manufactured, which was $80,500, and we would divide that by the number of units produced, which was 17,900, and that gives us $4.50 per unit for Gourmet Bones for 2024. And that is the conclusion of the demonstration for problem M129A.